Alright, so what I'm mostly interested in at the moment is crude oil. Because I think we've reached a price level in the 50s which is an unsustainable low in terms of the historic sort of range of oil prices. There's no the downturn that was augured by the inversion of the yield curve, the tariffs, the even a little bit of rising unemployment. I think, unless I'm mistaken, it's not materialised yet. Stocks are probably on their way to new highs. And oil has been. You look at it here; it's gone nowhere since September 2022. You got this ugly range with this huge plunge down candle in April, so 1 month ago, and my hypothesis that I'm trading off is that we're going to see a bounce, a move to at least $70. So even if we just test the breakdown area of this sort of triangle thing here that broke down, which is another 1,000 points from where we are. This is the monthly chart. You can see we actually got a positive divergence on the momentum of price volume trend, and we hit some interesting Fibonacci's, long-term fibs, as well around the 56 level. Weekly, we find our way to the weekly. We've hit this diagonal yellow trend line, which is also a weekly trend line, but I can't zoom out far enough to see where it comes from, but you know, that's something else. Here we see the 61.8s, these long-term retracement figures. We see again the positive divergence in price and volume trend. We see not quite a double bottom in RSI, but on the daily this is a positive divergence. On the weekly it's not quite. It's so close to being like a series of double bottoms. It's so close. And we've had a big up week. So I mean, we've come right up into the pivot. You can see there, 61, just over $61. That's the weekly pivot. And there it is on the daily. It's much easier to see on the daily. You see this positive divergence. You see, do we get a double bottom? Maybe just about. I mean, you know. In terms of short-term momentum, we closed above definitively here. So that was the 5th. We've consolidated and then broke above definitively here on the 8th on the RSI momentum. But we are at a potential resistance. These old lows coincide with these old highs. We might see a move down. That was an interesting candle there. You like the middle of the body of this candle here, this indecision candle, which would coincide with this mid-channel line. Back down to 58, 58.20, something like that. But the road I think is high. The road I think is to at least 70. There's the 4 hour. You see how this broadening formation, we broke out. We hit this resistance once, twice, and then we back tested it and we've moved up, which is potentially a good sign. When you get to back test and a move up like that, that's classic positive price behaviour. You can see on the 4 hourly this low, put in a big positive reversal relative to this low. Nothing quite so interesting on your ordinary RSI momentum. And again, you see the more pronounced positive divergences coming in on the price volume trend. The momentum of price volume trend. So looking to crude correlation charts. The ratio of the US dollar against the Canadian dollar against West Texas intermediate crude levels, this should trade inversely to crude oil. When this is going up, it's bad times for crude. When this is going down, it's good times for crude. It's going down. We've just closed under the 14-period moving average. We've got a sort of a double top negative divergence going on in momentum. Got our first negative histogram close, and we see more clearly, just as this is sort of like a double top with divergences, this is like your double bottom or your slightly lower low, but with this is your slightly high high, but with similarly again the divergences, and you see again the floor is at, what's that, 67.5, and the midpoint of this whole thing. Look at this. This is the $70 line here, cutting straight through the centre of all this action like a pivot, right at $70. So I think we're going back to at least there. That for me is further evidence, potential evidence. Stock of ExxonMobil versus West Texas Intermediate Crude. So a stock versus commodity, but it's the commodity stock versus the primary commodity of that company's business. So similarly, when this is going up, it's supposed to be bad news for oil. When it's going down, it's supposed to be good news for oil. Do these things work all the time? No. Do they even work some of the time? Probably not. But it's another level of information. It's another layer of information that you can consider. And it provides signals. It provides... It gives you the ability to construct logical trading statements. I will buy if, I will sell if. This action is this action is that. It is, supportive of having a bias towards buying, a bias towards selling. It enables you to take structured, semi-informed action in a logical way, which is all you can do when you're punting in the way in the fucking markets, because they'll do what they want. But it's not just plain and simple gambling punting, and you combine that with risk management. That's how you increase your odds, I suppose. Stocks have been on a tear. I've caught some of it. If we go to the daily on the specs, I caught a good part of this move, and then decided, for once in my wisdom, I mean, normally I would be clinging on and just like, yeah, it's going to go higher. I did actually clear out of my long positions somewhere near coming into these highs. Not exactly, I can't say exactly. It could go higher. We've had 2 dojis in a row. This whole thing has been consolidating since Friday the 2nd of May. Bears are going to be tempted to think it's going to roll over. This is the tariff rally, ABC, something like that. I think we're going to 6,500, 7,000 by maybe summer of next year, maybe sooner. I mean, who knows what this rally is going to be like, or if it'll just now meander around and go nowhere and slaughter everyone, which is what, as a trader, you always fear. And there you go. There you go. I mean, for someone who struggled for years with being a chronic, bearishly biased person because of a natural desire for sort of, I don't know, cosmic justice in the world. Cosmic justice. One day the Fed and the central bank schemes to inflate away the currency and keep pumping the stock markets, they'll all fail, and there'll be justice, and there'll be real markets and real prices, and and we'll all be free, and it was that, and then the socialism. What a load of rubbish. That's all I've got to say. Well, when you realise it, I mean, the problem with realising that so much of everything is actually just rubbish is then like, what is there left? If everything's a distraction and a front for organised cartels and powerful families, and everything is a contraption to distract or keep you busy, working tirelessly, pay those bills, or ensnare you somehow, or it's what's one to do? What's one to do? But anyway, further supportive of continued bullishness. NIOD is so close to making new highs. We're above the highs from March, but price is not. But, I mean, yeah, bullish. Issues. This is the volume. This is the issues on the New York Stock Exchange. Again, we've breached these March highs. Can you see? Can you see that? If I do that, there we go. We've not actually, not quite. Oh no, the March highs. These are the Feb highs. We're about to breach the Feb highs. You know, we're above 40. We're above 60 on the Rinia. This is, you know, you can see when we're bouncing around and in between these levels, price tends to sort of float up. And NEHL, new highs minus new lows, just ever so slightly negative. We've been struggling to go positive, but that means that if it wants to keep going up, then obviously participation can increase. So at the moment, new highs, new lows are about the same. New lows winning sometimes, new highs winning sometimes, just ever so slightly. Traditionally, this would be a bearish indication because we've had this huge rally, this humongous rally, but we failed to convincingly break the zero line, the zero bound. But it can also be. It can go. This is classic. It can go up. It can go down. I know that, but combined with these other signals and a potential rally in crude, it looks more tasty on the buy side than not. I think in balance. I used to start every week. I did these things. I've not done these videos in a while. Looking at silver, and now I just avoid it like the plague. I avoid it like the plague. I mean, look at this price action. Look at this swooning drop. You get the swooning bounce. It's gone nowhere since the 16th of April. It's the same price now it was a month ago, which is the same price it was in March, which is the same price it was in February, which is the same price it was in December of last year, which is the same price it was in September of last year, which is the same price it was in May of last year, which is the same price it was... Oh, fuck, my chart also fucking fits itself. Well, way back in time, in like 2016 or something like that. So it's a disaster, it's a nightmare, this is not a bull market. You know, where's the bull market? Let's draw a box around it. This is just a box of hell. This is a nightmare. I mean, what more really do you want to say about that? So I'm avoiding silver presently. Natural gas. I was looking at this on the weekly the other day, and yeah, you got this lovely. I mean, look at this. We came right into this VWAP. Here's your low on close from the 27th of January, week commencing, and you got this incredible. Look at this. Look at this positive reversal. Look at the size of this positive reversal. I mean, yeah, that was a great buying opportunity right there. Did we take the wick on these lows? No, not quite. Daily. There's no reason to be selling. Yep, we're at this fib, we're at this pivot. That's also this low here, so we could have a low becomes a high, a bottom becomes a top. We could see that, but you would go down on lower time frames and be looking for buying opportunities on the lower time frames, because the higher time frame up move, one has to presume, until conclusively demonstrated otherwise, is still intact. Is there anything else worth looking at? Tech, Cocoa. Intel, yeah, I mean, I jumped the gun a bit on this. I was thinking back here that we were going to start, that Intel was going to go to the bloody moon, because there was so much bad news. They were talking about liquidating the company, selling off their foundries, they were going to get bought out by somebody, they were going bankrupt, they fired their CEO, this famous guy who helped them in the past. But this to me, I mean, can I bring volume up? Let's have a look at volume. Will that add anything to the story? I mean, yeah, I mean, look at this shit. These lows, look at the volume. We've come into these lows from here. Elevated volume. Here's the average level of volume. Look how much we're seeing these spikes. Close to double the average high. Not even the average, not even like the middle, the median. That's somewhere down here. That's like quadruple, quintuple, sextuple. Your typical huge divergences coming in, and I think whatever Intel cooks up next, I mean, what more bad news is there to come out? This is when you buy. This stock's going to go back to its all-time highs. Yeah, divergence upon divergence. The volume, you know, histo's been blue for the longest time. And even if it doesn't, I mean, it doesn't have to do that. It could open, you know, on Monday or Sunday night rather, whenever the fuck it opens. Monday because it's not a Globex, and it could just, you know, it could do something like that and kill everyone. But on balance, it's a juicy opportunity, I think. So yeah, Intel. I don't have an awful lot more to say than that. I'm looking forward to Crude getting 70. If Crude is going to normalise even further in its price, especially when adjusted for inflation. I mean, the last time Crude was at 50 was 4 years ago. So 4 years of, let's say, 3% inflation. That's like another 10-15% on top, which would be $60. So it's below its inflation adjusted lows from like 4 or 5 years ago. Because it's in the 50s and it should be in the 60s, in I guess inflation adjusted. Is my completely amateurish and uninformed fundamental analysis there. And that's that. Bring on 70, please. Thank you very much.